This is your Wall Street wake-up call. The European Central Bank holds its September policy meeting on Thursday. Here with a preview is Craig Earlham, senior market analyst at Owanda, based in London. So, Craig, it's good to see you. Do you expect more stimulus measures to be announced on Thursday?
I don't think I expect more stimulus measures to be announced. At the very most, they may push back the date for the bond purchase beyond March 2017, which is the current deadline. Obviously, that's only 6 months away, so they're going to have to push it back at some stage anyway, you'd think. So I think they may potentially look to announce that tomorrow. But that doesn't really address some of the issues that have been raised around the ECB and how the bond buying programme and how the other stimulus measures are actually playing out. We've still got very low inflation in the Eurozone, very much far below the 2% inflation target that the ECB has. Growth is still moderate, and it seems that these efforts from the central bank just aren't doing enough to stimulate the economy now. And we know that the governments have to play a bigger part, and fiscal stimulus is going to have to become an increasingly important component of the stimulus in the euro area. But the question is now raised, what more can the ECB actually do on its part to try and stimulate the economy, especially given the barriers that it currently has before it?
Well, one of those barriers is a shortage of bonds to purchase, largely due to rules that the ECB has. So how do you think they'll address this worry that they are running out of bonds to buy, and are the parameters that the ECB has set up too limiting?
Well, there's kind of a political issue that it's going to have within the ECB itself as to how it addresses this problem. The biggest issue that it has currently is that around half of the German bonds that it would be able to purchase is no longer eligible under the ECB's current QE programme. They have to buy debt, or they have to buy German debt that is yielding above the minus 0.4% deposit rate. And they also have to buy around 10 billion euros a month in German debt because of the size of the German economy, again under the rules of the quantitative easing programme. The problem this leaves is that there isn't actually many bonds that the ECB can buy. So what they've got to do is they've got to look at other options in which they can do that. That means altering the size of the German debt that they buy, which is unlikely to go down too well with the German board members and in Germany as a whole. They could look to lower the deposit rate, which would open the door to additional German debt, which again isn't going to go down too well. Or they're going to have to look at other unconventional options in order to allow them to purchase more debt, be it corporate bonds or other, in order to get around this issue. But it does seem that this is just one of many issues facing the ECB right now, which is likely to continue in the coming months.
Right, and they just started purchasing corporate bonds earlier this year. Now, just quickly, we'll also get some fresh growth forecasts for the Eurozone. How will Brexit affect this almost 3 months later? I mean, it's almost hard to say Brexit, right? What Brexit? Nothing has really happened.
Yeah, I mean, the early stages of the Brexit have been quite... there hasn't been, I guess, a massive impact on the economy of the UK, let alone the Eurozone at this stage. So I don't expect there to be an enormous downgrade to the short term, but I think when you move out to the longer term, I do think the euro area is going to anticipate more of an impact. So when we're looking at 2017, 2018 growth forecasts, inflation forecasts, I do think there's going to be a Brexit element there, which is going to have to result in lower growth expectations here. But I think the impact is going to be a bit smaller than people previously anticipated, but this still means that the ECB will have to do more and governments will have to do more in order to support such a scenario.
All right, we'll be watching. Craig Earlham from Owanda in London. Craig, thank you.
Thank you.
I'm Scott Gamm, and you're watching The Street.